U.S. private passenger non-standard auto insurers saw a significant turnaround in 2024. Here to discuss whether the positive trends have continued in 2025 are David Blades, Associate Director, Industry Research and Analytics, and Alexander Winant, Associate Analyst, both of AM Best. And Alex, as mentioned, 2024 was a pretty good year for non-standard auto writers. How's 2025 shaping up?
Yeah, 2024 was a monumental year for non-standard auto. It was the first time in 11 years that the combined ratio broke profitability. The drivers behind that were underwriting success, net investment income, and rate adequacy. Also, a second layer to that is digitization that we're seeing in claims and underwriting and sales and distribution. And all those things combined bring down operating overhead. And then in 2025, we've seen that momentum continue and even ramp up. A big metric here is that underwriting profit in the first half of 2025 was quadruple what it was in 2024. We also saw the combined ratio fall further. It fell another 1.5. Next is the loss and LAE ratio started to creep down a little bit in 2023, and then in the first half of 2025, it was the lowest it's been since 2014, excluding some of the artificial COVID metrics that we saw during the pandemic. For the operating ratio, we saw it broke profitability in 2024, and that stayed positive in the first half of 2025. We also saw net leverage come down a little bit, and that's always a positive thing. So overall, the story here is that you have a high risk business line that struggled for over a decade. But through that adversity, they were able to identify winning underwriting techniques and figure out adequate rates. And that is what finally delivered them to profitability.
Alex, the report notes how important scale is for the non-standard auto writers. Can you explain that dynamic?
Yeah, well, non-standard auto is non-standard in the sense that it's high risk. So one risk that you have is driving capability. You're insuring drivers with reckless tendencies or little experience or poor history. And then kind of connected to that is a financial risk. These high-risk drivers often have poor credit and unsound spending habits. So you have these risky policyholders with these unpredictable financial patterns, and that causes additional costs to non-standard that you don't see in the private passenger auto. And that all brings you to a point where you just have high fixed operating costs. And the way, or one of the few ways to mitigate that, is to scale up and stretch those high fixed costs across a larger revenue base. Recently, in non-standard auto, we've seen a lot of consolidation. You have a lot of smaller insurers that struggled with these high fixed costs in the composite, but now you have a lot more consolidated market that has been able to bring that solution of scale.
David, is there any chance that tariffs or any other pressures could impact the segment?
I think specifically with regard to tariffs, I think our anticipation is that where they could impact non-standard auto writers is with the auto physical damage claim costs. The thought of, imported parts, for cars that are involved in accidents, the higher cost of those imported auto parts because of the tariffs. We're going to look at that at the end of the year. I think once we get all the 2025 data in, that's one of the things we're going to look at. Also, with regards to any accidents that are really serious and, there are total losses from an auto standpoint, any of the replacement vehicles that are going to be coming from overseas, again, you would anticipate that because of the tariffs and depending on the countries, that there will be higher costs associated with those claim costs. So I think, that's something that we're definitely going to dive into and look at. I think it's still too early to really say anything definitive with regards to how much impact that has had on the non-standard auto and on private passenger auto in general. But I think that's something that we're anticipating that. And so we'll look at the claim trends and we'll look at what we've seen in the previous years, how 2025 matches up to that, and look to see what we can glean and what insights we can gather from that, and then see how that will continue, possibly impacting 2026 results.
Along those lines, do you expect the positive trends to hold up through the next year? And do you have any concerns?
Well, I think with regards to some of the things that Alex talked about, I think some of the things that were endemic to the improvements that we've seen with non-standard auto writers, I think, a lot of that has been just a much, I think it's actually a manifestation of years of focusing on better price and rate adequacy. And I think those efforts bore some fruit, obviously, 2023, and then definitely in 2024. And as Alex mentioned, we're seeing through the first half and even through the third quarter, early third quarter numbers that we're aggregating now, we're seeing that loss ratios are actually still trending in a positive direction. So from that perspective, we'll continue to look at that, but that's something that I think will continue to see positively impact the results of non-standard auto underwriters. I think also just the fact that private passenger auto and non-standard auto insurers in general have been better at leveraging technology. So from the standpoint of that technology and data analytics being a better help to claims, to the underwriting practice, and to overall operations, I think that's something that we think might continue to impact and benefit non-standard auto writers. From the standpoint of things that we're concerned about, again, we mentioned how tariffs might impact claim costs. So we'll look at that and see what impact that has specifically on the auto physical damage claim trends. And then also with regards to adverse development, we've seen adverse development creep up a little bit in talking about our AM Best non-standard auto composite and how we look at that. So we've seen that crept up a little bit the last couple of years. So that's something also that we'll keep our eyes on. But yeah, there'll still continue to be challenges as Alex mentioned. Non-standard auto insurers always have to deal with the issue of efficiency and just, needing a little bit more scale to help offset their fixed costs, because again, they're greater fixed costs with regards to non-standard auto policyholders, because a lot of them have monthly policies or just shorter term policies than you might find in the overall private passenger auto market. So that creates greater overall underwriting expenses. So we'll continue to look at that in terms of how those trends and how, again, like I mentioned, the utilization of technology helps to hopefully manage that successfully as we go forward.
Thanks, David. Alex?
Thanks, John.
Thank you, John.
That was David Blades, Associate Director, Industry Research and Analytics, and Alex Winant, Associate Analyst, both of AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.